Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Today we're breaking down exactly how to report your Forex income on your U.S. tax return. It can seem complicated, but it really comes down to two main options the IRS gives you. Understanding these options is key to paying the right amount of tax and potentially saving a lot of money. The first and default method is called Section 988. If you do nothing, this is how the IRS treats your Forex gains and losses. Under Section 988, all your net Forex profit is taxed as ordinary income. This means it's taxed at the same rate as your job salary. So if you're in the 24% tax bracket, you'll pay 24% on your Forex gains. These gains and losses get reported on Schedule 1 of your Form 1040. If you have a net loss for the year, you can use that loss to offset other ordinary income, like your W-2 wages, without the typical capital loss limitations. This can be an advantage if you have a losing year. But there's a second, often much better, option called a Section 1256 election. This is something you have to actively choose to use. Section 1256 contracts get special tax treatment, and the biggest benefit is the 60-40 rule. This awesome rule means that 60% of your net gain is treated as a long-term capital gain, which has a much lower tax rate for most people. The other 40% is treated as a short-term capital gain, which is taxed at your higher, ordinary income rate. For most profitable traders, this blended rate is significantly lower than their regular income tax rate, which means more money in your pocket. You report this income on Form 6781, Gains and Losses from Section 1256 Contracts and Straddles. There's a very important catch, though. You must make the election to use Section 1256 treatment by the first day of the tax year, or on the very first day you make a Forex trade for that year. You don't file a special form with the IRS to make the election, you simply make a clear note in your own trading records that you are electing Section 1256 treatment for the year. This is a critical step you can't miss. So, which should you choose? If you expect to be profitable, the Section 1256 election with its 60-40 rule is almost always the better choice. If you anticipate a net loss, staying with the default Section 988 might be beneficial because you can deduct the full loss against your other income. Your US-based Forex broker will send you a Form 1099-B at the end of the year summarizing your profit or loss. You should always check with them to see how they report these figures. To recap, your two choices are Section 988 for ordinary income treatment or electing Section 1256 for the favorable 60/40 capital gains treatment. Please remember, this information is for educational purposes only and is not tax advice. You should always consult with a qualified tax professional who understands trader taxation. I hope this breakdown helps you understand your Forex tax obligations. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel.